Hello. Are you worried about inheritance tax? The 2024 budget has made sweeping changes to this already unpopular tax. More estates will have to pay it, more of your wealth could be caught by it, even your pension could be dragged into the IHT net from 2027. And the IHT-free allowances have been frozen until 2030. However, if you'd like to keep control of your assets and be able to pass them to your loved ones without them facing a tax bill of up to 40%, there are still ways to do that, using official tax reliefs that have existed for decades. Let me explain. If you're an experienced investor, an inheritance tax portfolio could be a relatively simple and flexible way to shelter your assets from IHT. Inheritance tax portfolios work by investing in companies that qualify for business property relief, BPR for short. This tax relief was introduced in 1976 so that family businesses could be passed down through generations free of inheritance tax. Over time, the scope of the relief has been widened. Many private companies qualify, and if you invest in them, you could benefit. We'll give some examples in a moment. But first, how does the tax relief work in practice? When a company qualifies for BPR, it becomes eligible for IHT relief after 2 years, much more quickly than other forms of IHT planning, provided it remains qualifying and you are still invested on death. This has been the case for decades and is not changing. Following the budget changes from 6th of April 2026, 100% IHT relief will be capped at the first £1 million of assets, including private companies and agricultural property. Anything over £1 million will still benefit from IHT relief, but at a reduced rate of 50%. In other words, it will be taxed at 20% rather than 40%, so still quite valuable. This is in addition to the nil rate band and the residence nil rate band. What is more, you do not have to give anything away. You keep ownership and control of your investments, and if you wish, you can even draw income from them. If your circumstances change and you want some of that money, the investments are yours to sell. Although, of course, the amount you withdraw will no longer be sheltered from inheritance tax. Remember, tax rules can change and the value of tax benefits depend on circumstances. So how can you invest in companies that qualify for business property relief? If you have access to unlisted investment opportunities, you could pick and choose your own investments. However, many prefer to leave that to a professional asset manager offering an inheritance tax portfolio service. Generally speaking, your portfolio will be made up of unquoted trading companies that qualify for business property relief. Unquoted companies can be many things. Portfolios might include asset-backed businesses such as care homes and pubs. Some invest in renewable energy projects such as solar installations, wind farms, or energy storage. Others might be lending businesses, for example, financing property development or providing bridging loans. So what are the risks? Inheritance tax portfolios are investments, so your capital is at risk. The portfolios are normally managed with cash preservation as a priority and aim for some growth, but there are no guarantees. The value could fall as well as rise, and you could get back less than you invest. The companies you invest in may be smaller, newer, or subject to less stringent governance compared to a listed business. Inevitably, this carries extra risks, so IHT portfolios are not for everyone. You retain control of your assets and can access them if need be. However, shares in unquoted companies are typically much less liquid than those listed on the stock exchange, so it will normally take longer to liquidate your portfolio. Please remember that tax rules can change and the availability of business property relief will require portfolio companies to maintain their qualifying status. Should they lose it, inheritance tax relief would be lost too. That said, for those comfortable with investing and the risks, inheritance tax portfolios could be an option to pass more of your assets to your family, and unlike many other forms of inheritance tax planning, you retain control of them. For those happy to make investment decisions without advice, you can find more information on the Wealth Club website. If you're unsure, seek professional advice.